Thank you very much for joining our presentation. Today, we're going to talk about Evergrande's role as a systemic risk for the global financial system. With we, I mean my dear colleagues Antonio, Tian, Akshaya, Shanice, and myself, Konstantin. This is our agenda for today's presentation. But now on to my colleague Tian.
We cannot discuss Evergrande without examining the system in which they operate. The Chinese financial system and the economy is highly leveraged, which supported the economic growth of China for many years. However, recently, the return on the investments are not allowing for easy service of the debt. Corporations provide a large portion of, or contribute a large portion of the debt as they rely heavily on blank loans and retained earnings and are 2 times more leveraged than American firms. Individual investors prefer property, wealth management products, and bank deposits and stay away from the stock market. This causes a heavily reliance on banks who have their own moral hazard problem as they provide lending with the notion that governments will bail out these large corporations. The Chinese stock market is insignificant to the economy, but the bond market plays a large role. We want to focus on the increase in foreign ownership over the last 5 years, which has opened up markets for the Chinese companies. And we continue to expect it to grow due to FTSE Russell conditions in 2021, which were met. In relation to the global financial system, they were once considered a very closed economy, but recently they have eased capital controls to attract foreign investors for debt and equity financing. However, it has been slow due to the wariness of the Chinese government. Also, China is a large supplier of loanable funds to the global economies, as they have granted over $843 billion in loans and grants. We cannot discuss Evergrande without discussing the real estate market, which contributes over 25% of GDP to China, indicating it is an economic engine for China. Real estate prices to household income in China is astronomical, as it takes 27 years of household income in Shenzhen to purchase one home. Real estate prices also grow or appreciate 10 to 15% per year in China, allowing citizens to believe that it is a safe investment and a rapid way to increase individual wealth, which has led to speculation and created an asset pricing bubble within this industry. So the government implemented the 3 red line policy, which was used to curb borrowing and increase the financial health of this industry. Liability to asset ratio needs to be less than 70%, net gearing ratio less than 100%, and cash to short-term debt needs to be equal to 1 in order to access funding. This basically crippled the real estate market in China.
But how did Evergrande go from being one of the most valuable real estate companies in the world to the most indebted developer? One can point to its business model. Its business model depends on a constant stream of cash, which through various means results in a highly leveraged business. Here is how. Developers purchase these leases and then develop pre-designed apartment buildings, which they pre-sell to customers. These customers put down a deposit, and Evergrande currently has deposits for over 1.5 million customers. Evergrande then uses the cash received as a down payment to borrow more money. The company pays its contractors and suppliers with commercial paper. This system works well for rapid expansion. As Evergrande saw property prices appreciating, they pushed the model to the extreme by borrowing more money from customers, suppliers, lending institutions, and even employees and other investors through wealth management products. The company became highly leveraged, but the 3 red line policy put a stop to this constant stream of cash. Here's a timeline of events leading to its debt problems and what the firm has done to raise funds so far. In August 2017, Evergrande targeted a net gearing ratio of 70%. Then the central bank identified them as a systemic risk in November 2018. The introduction of the 3 red lines policy put a stop to their cash flow and borrowing. So in 2020, they had to discount property to raise cash. To further increase cash flow, the company raised billions by selling its assets, doing IPOs, and by bringing on new investors. Eventually, by March 2020, their efforts were still not sufficient, and its stock prices and bonds continued to fall. This can be seen in the following table. The rating of the bond dropped from B+ to CC in only 3 months. And also when looking at the following graphs, we can say that Evergrande's bonds dropped by 70%, and its shares lost 85% of its value this year. As for the current situation, Evergrande needs to repay 7.4 billion of maturing bonds next year, But the big question is, will they manage to pay their lenders? As of now, it seems unlikely due to the massive size of the bonds. However, Evergrande is not bankrupt yet, which makes it interesting to see how the situation will play out. Now, my colleague Constantine will provide a more detailed outlook, speaking about the systemic risk that Evergrande may be.
Thank you, Shanice. As for the contagion risk, some of the biggest emerging market investors like BlackRock or HSBC are holding Evergrande bonds. All of these companies will most likely experience substantial losses on their investments, but these write-offs could only be the surface of the outcome of Evergrande's over-leveraging. We thought of 3 different scenarios on how they could play out. Please note that these scenarios are hypothetical and could play out in a different way. As the first scenario, the Evergrande default will most likely spill over to a few selected property firms in China with high liabilities. We can already see this happening with certain developers defaulting. China's government could step in aggressively to ensure an orderly containment with a direct relief to calm down markets, resulting in a small decline in a few related industries, such as in construction, concrete, steel, machines, and of course, real estate. As a result, we would see a decline in GDP and rather short-term consequences for China's domestic spending and consumption power. The Chinese Communist Party would at least manage to keep China's property prices fairly stable, thus not affecting the savings and wealth of the main street too significantly. As the Chinese real estate industry does not heavily rely on imports, the spillover effects would be barely visible in the global financial markets when looking at the bigger picture. As for the second scenario, Evergrande's default would result in a spillover to other property firms in China, increasing the rate of defaults. With an orderly containment, a moderate decline in the already mentioned industries would be most likely. The bigger decline in GDP would negatively impact China's domestic spending and consumption power and lead to a medium to long-term cooling of the China property market with a rather big slowdown of international commodity markets. As a result of that, the global financial markets would feel increased pressure to be felt in declining stock and bond prices. There could also be severe supply chain issues and a lower than expected demand within several industries. This in result would indicate a moderate decline in the GDP of China trade-depending countries. The final and most dangerous scenario for the global financial system starts again with a spillover of Evergrande's default to other property and real estate firms in China. With an unorderly containment, e.g. the Chinese Communist Party not intervening, a considerable decline in many of the above industries and others such as services is to be expected. Panic and liquidity squeeze related market actions are highly likely. One could compare this to the reaction of the stock and bond market at the start of the coronavirus pandemic in March 2020. Property prices in China would collapse and lead to a fairly sized property sell-off, creating harm to the balance sheet of many foreign investors. The rather significant negative GDP impact would hit Chinese wallets directly, leading to severe repercussions for China-focused firms such as auto manufacturers like Tesla or Daimler, and harm China's future growth in general. The impact on the global financial system is therefore hard to determine, but higher unemployment and a recession in export-heavy countries seems highly likely. Moving on to the recommendations for containment and on how to prevent a larger impact to the global financial system. We have identified 4 different solutions, starting with a debt restructuring process. We believe that the People's Bank of China, which is the central bank of China, should play a key role in that, as it has the power to intervene and impose debt restructuring measures by pressuring commercial banks and other creditors to extend loans so that the fallout can be contained and a general breakdown in the financial markets may be avoided. Other recommendations include fast asset sales with substantial haircuts in order to shut down operations in businesses that present non-core activities in order to have more cash available. Other would also be to focus on the regular car market, and as a last resort, would be an acquisition of the company by the Chinese government and state-owned developers. So already at the end of our presentation, we would like to thank you very much for your attention. We hope that you enjoyed the presentation about Evergrande as a systemic risk for the global financial system. If you have any questions, feel free to contact us via our email, and also please find our references attached.